Welcome to RenMac Off Script. We open to discuss markets, economics, policy, history, and life. It's the 4th of October, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted to our Twitter account at RenMac LLC, and you can subscribe to our YouTube channel and see our bright beaming faces on that as well. It's Payroll Friday, Neil, so I'm going to give you the floor. Big, strong number. What do you make of it?
Well, what I make of it, Jeff, is it was really strong. I mean, it's hard to say much beyond that. I think maybe you could say that labor market conditions had been cooling, and now this is the first sign that they're stabilizing. But even if you just take this as a standalone number, it was just undeniably strong. You had 254,000 on non-farm payrolls. There were upward revisions of 72,000 to the prior 2 months. I mean, we thought that there would be upward revisions. I didn't know that they'd be this strong. And if you look at the last 3 months of data, non-farm payrolls are averaging 186,000 per month. And the unemployment rate ticked down to 4.1%. This report is at odds with a lot of the survey data that's been coming out over the last month for September. Things like ISM employment survey, Conference Board labor differential, all of those have been consistent with a cooling labor market. Now, obviously, the jobs number takes precedent over all of that. And so it is what it is. I mean, it's one of these things, as an analyst, just to keep it honest. I mean, they always say if you're right about one big call, you're wrong about everything else. We got the 50 basis point call right in September, and we're going to be wrong now. It doesn't mean the Fed's not cutting, but they won't be cutting 50. So it's unlikely that they're going to be going 50 basis points. Really, I mean, this I think was so strong that it probably takes 50s off the table for the year. But, we'll see. Things can change. But
is there, for some reason, is this prone to big revisions? Is there anything seasonally that you tend to have bigger revisions on this type of data?
Well, I mean, these numbers do ebb and flow. I mean, this August is always historically revised up. I mean, for whatever reason, I don't know if there's a seasonality issue in there. Maybe, yeah, but historically, if you look, I mean, up 90% of the time over the last decade, you've seen an upward revision to August from the initial print. So we got that. I mean, there were some things that I found interesting in there. I mean, so for example, you continue to see this steady upward march in construction employment, even though units under construction and housing have been weak. We saw a very strong increase in leisure and hospitality employment. Now, leisure and hospitality was running quite sluggish over the last, 3-4 months or so, and it just surged to levels we haven't seen, in over a year, it feels like. So the rate of growth in leisure and hospitality is quite strong. But, look, I mean, I think for equity market investors, this is good news because at the end of the day, we're talking about the Fed cutting rates with the labor markets solid, right? Like the unemployment rate ticked back down to 4.1%. So, this was a good report. And, it's a bit of a wake-up call, I think, for me, because up until now, I'd been sort of assuming that the labor markets were continuing to cool. You never want to put too much into 1 month, but this was a strong report. Certainly we didn't think that labor markets were falling off of a cliff, but, the trend had been much weaker going into this. So we'll see what happens in the next month. But certainly for now, I think for the Fed, it basically means that, they have time. I mean, there's no need to go 50 if the economy is not sort of trending and the labor markets aren't trending in a slower direction. And I think for equity market investors, it's welcome news because you don't have to worry about the Fed being behind the curve. All you need to think about is, okay, labor markets are growing. The Fed is fine. I can think about earnings. The Fed's still cutting. I mean, we're talking about solid labor market conditions and a Fed cutting rates. I think that's a pretty favorable mix for equity market investors.
Yeah, well, certainly our market cycle clock we update at the beginning of the month, and that's squarely in a bullish camp here. About as squarely in that bullish camp as you can get. It implies roughly a 15.5% annualized return when we're in this zone, with a drawdown roughly 4%. So obviously those measures are, good news. A 15% return to experience a 4% drawdown is a pretty healthy ratio. So clearly that's good news. We're starting to see some improvement out of cyclical versus defensives. I would say the most recent in the S&P 500 has been the discretionary names breaking out above their old high versus the defensive names. It's interesting. It's not that the discretionary names have been so strong. It's that it's that the stapled names, the defensive names, the staples have been so weak. They actually went on to make a new relative strength low, and that by default pushes that index higher when you look at it on a relative basis. So, I would agree that stuff is in pretty good shape. And even, when we go through and look at the credit markets, I mean, you've got triple B spreads to treasuries at a new cycle low. You've got a little bit of activity around quarter end funding. We saw it in the banking system where there was a pretty good draw from the Fed for quarter end funding, but that went away pretty quickly. So, just getting the house in order, and all that seems to be in good shape. So I like what we're seeing. The payroll data's got to be good news. I mean, I don't think the average electorate looks at the payroll numbers and thinks about it that way. They think about their own pocketbook and their own job. But this has to be better news for Harris than not. What do you make of the latest, Steve?
Right, it doesn't hurt. I guess there's a question of how much it helps. I think to your point, after 4 years, people, my guess at this point, already have pretty firm views with how they view the economy and the Biden administration, which Harris is a part of, sort of, I guess, direction of that. So,
Anything from this strike that was averted? What's the behind the scenes wrangling? I know you were in the camp that it was going to be brief, from your sources. They kind of pushed it off. What does that mean, and how much was that orchestrated, if you will, do you think, by the administration and powers that be?
well, sure. One of the challenges that Harris has is that she is part of the current administration. So anytime there's something unfavorable potentially politically for the current administration, she's at risk. I think with a lot of these situations, when you talk about some of these October surprises, the port strike was one. There's a lot more downside risk if you're sort of the incumbent, which Harris more or less is, given again she's part of the current administration, as opposed to upside. So look, it's a big deal not to have a prolonged strike that could have exacerbated concerns about supply shortages and maybe price increases. But again, it's avoiding the downside rather than really getting the benefit from the upside. I think you might even be able to put the situation in the Middle East in a similar bucket for the administration. If the conflict spreads even more, and particularly if U.S. forces get involved, that is nothing but downside in terms of the political impact here versus if there is some sort of solution, or at least it's put off and the containment sort of comes into play here, then there's not much upside, I think, for Harris there. In terms of other potential, October surprises, there are Democrats who may point to this report from Special Counsel Jack Smith. I'm a little skeptical that I would call that an October surprise. This is involving a lot of the January 6 events and Trump's role with the transition of power. I mean, most of this information was already new. To the extent that it's a surprise, it may just be a timing and deliberate attempt to change the narrative, sort of, away, particularly after the vice presidential debate performance. I think there's really an effort there to try to remind voters of the January 6th and the events following that, to try to discourage any persuadable voters from going to Trump. But again, in terms of a surprise, most of this information isn't new at this point. So that's sort of how I'm thinking about it.
What's what's the fallout from the debate? I can't imagine much. I mean, I would just say from our household's perspective, the good news was there was a certain civility that we haven't seen in politics in a long time, which was refreshing, I guess. But at the same time, can somebody tell these guys that they're playing to the television and the camera, not to each other? When they look at each other, like, somebody has to be smart enough to say, stop looking at one another and look at the camera and actually make those reactions, to the camera. Like if you think what they're saying is bullshit, you should like roll your eyes or something at least to the camera so the rest of the world kind of sees it and plays along with it. I'm like, you guys are totally missing an opportunity here to, kind of downplay what your opponent's doing through the, use of media and the camera. Really poor scripting on their part.
Yeah, I mean, it's not from lack of preparation and all the money that goes into that. So I don't have any explanation for that. Also, in addition to civility, there's also more substance, to this extent that people wanted to learn more about the policy positions of both Harris and Trump. They probably got more detail from their running mates than they did from the actual candidates themselves. In terms of moving the needle, I'm sort of inclined with you that, even the first presidential debate between Trump and Harris didn't really move the needle that much in the polls. So I doubt this one will do much of that. That said, the polls are close, and margins matter. And to the extent that people draw a conclusion based on the presidential nominees' decision making and whom they select, perhaps that's influential. You might be able to make a case that it could be more impactful for 2028 than 2024, given Vance's performance, positioning him as sort of the heir to Trump's base of support, probably positioning himself where I think objectively just looking at the polls taken after that, most showed him sort of ahead of Walz there. So I thought he did himself a good service. And for the Trump campaign, they probably needed some momentum, at least on the narrative front. And I think, more or less that Vance's performance provided that. It was interesting to watch in the spin room how the conversation quickly pivoted from referring to him as weird to slick, which might suggest that Democrats also, for the most part, at least on the campaign, thought his performance was effective. But again, moving forward, I don't really think this is going to be consequential.
My personal favorite actually was how they all said that VP debates don't matter, which is a pretty interesting, which is a tell, right? I mean, the side that's saying they don't matter.
Right. We lost. It doesn't matter.
But
Right.
I would argue that they might actually, I agree with that. They don't matter, but they probably matter a little bit more now, considering there's been 2 assassination attempts at someone leading the ticket. So in the last 3 months, so maybe they do matter a little bit more, but I digress.
Well, Neil mentioned, we were talking about October surprises. We were talking about before more of the known unknowns in terms of impact here from some of these events. We talked about the unknown unknowns. Are we going to have another situation of political violence? Another unknown unknown is, are we going to have a second debate between Trump and Harris? I'm less inclined to think that's going to happen, given what was concerns on the Republican side with respect to moderator bias, again, surfacing here. My sense is if Trump's going to debate, it's going to be on Fox with moderators of his terms. If not, he's going to be less inclined to do this. I think he'd probably rather have Vance's performance sort of be the last word from his standpoint, but we'll see. That's, again, sort of thinking about, what could potentially maybe move some of these persuadable voters, given how close things are in the polls. I mean, the 7 battleground states are all within the margin of error. And we've talked before about, polling bias and, whether or not it's going to be an issue this time. So just keep that in mind when you're thinking about it.
Has the aftermath of the hurricane, I know North Carolina is in play, Georgia's in play, though that didn't seem to be impacted as much. Any impact that is having, the aftermath, the response to that in terms of the polls, and will it be cleaned up enough? I mean, obviously there's devastation, it's not going to be cleaned up, but in terms of getting to the voting booth and kind of the smooth running of the election, if you can call it that, any ramifications from the hurricane with that, or is there plenty of time to get those settled?
I would put that in the category of October surprise as well, more the response to the hurricane. I know it happened before September. My cousin's actually in Asheville in the picture she's sending down there. A lot of people hurting. So, obviously thoughts and prayers are with them. But in terms of the impact, we don't know in terms of, is this going to impact people's ability to vote in person? You already had the RFK Jr. lawsuit there that may have delayed getting the ballots distributed to people before they were dispersed. If you look at Asheville, that tends to be a little left-leaning, but a lot of Republicans tend to be more day of voters. So sort of the impact, at least at this point, I believe is mixed. One thing I would watch and be cautious of moving forward are polls from Georgia and North Carolina in particular, just because I assume it's going to have some impact on the response rate. So if we start to see some major shift over the next week or two in one way or the other, I would take that with a grain of salt, just because I think that would be potentially disrupted. I think going back to the port strike being resolved, that's important because I was starting to wonder, whether or not the administration at some point would try to raise a question whether the port strike or the damage to some of those ports along the path of the storm were more to blame there for some of the challenge. But again, obviously, that's no longer the case. In terms of the actual federal response, again, I think that's sort of similar to the port strike as well as the situation in the Middle East, where there's probably little upside, but more potential downside for the administration. I mean, if you knock it out of the park, that's more or less what people expect. And we all sort of remember how Katrina and how it was covered really damaged the legacy of George W. Bush, and obviously it helped John McCain in that presidential race. So again, these are sort of the known unknowns with respect to October surprises.
Anything from this Mayor Adams talk about rot throughout the structure here? I mean, it's unbelievable, but I like the guy, so it's it's a little disheartening. But how serious is this? How unusual is this? Right before the bigger election, and is this? There are some conspiracy theories out there that he wasn't playing ball in the immigration crisis, and he was critical of that. What's your take on it, or is it just local politics, no big deal?
I won't touch the conspiracy theories this time, although I'm usually not afraid to wade in there. I just don't know enough about the local politics there. But I will say, with New York, that and California are really going to determine, I think, the majority in the House. And obviously, the situation with Adams isn't going to help Democrats. That said, there's a Republican, Representative Esposito, who has his own issues with respect to employment of his girlfriend, mistress, I believe her daughter, or something like that. So that's not going to help Republicans out more in Long Island. So, I don't know if it's going to necessarily be a wash, but, I think those local stories tend to matter more in those House races. And given the political significance, again, of New York and California, not competitive at the presidential level, but really in determining who's going to control the House, I think that's important. Go back to North Carolina, too. I mean, that was one of the areas where Republicans were able to use their legislative advantage to draw more favorable districts this time around, and whether or not they're going to benefit from those, still not sure, given the impact of Hurricane Helene. Also have the concern sort of at the top of the ticket, not with President Trump necessarily, but the gubernatorial candidate, Mark Robinson, we've talked about. So those probably aren't things working in favor of Republicans, at least in the House.
And how about what's happening with Iran, Hezbollah, Hamas, etc.? I mean, are we at the point where it's close to regime change? I mean, is Tehran gonna topple? I mean, they've got to be on fairly thin ice in terms of the strength of their proxies. Obviously, the underlying population tends to certainly be more sympathetic to Western views and the like. What's the latest out of there from your seat?
Unfortunately, I think the situation is going to get worse before it gets better. And I think what you're candidly seeing is an absence of leadership on the part of the US right now. I mean, Israel's not really listening to the US. Iran doesn't seem to be listening to the US position. I'm sort of wondering what Israel is, sort of the ball's in their court now to respond. And there's some thought of whether or not they may go as far as to just proactively take out the nuclear facilities there in Iran, whether this is the opportunity to do that. You had President Biden on Thursday talk about the discussion of whether or not Israel would take out Iranian oil facilities, which is why I think you saw the oil markets respond the way they did. But we're at that stage now. So any idea of a ceasefire, at least in the near term, to me seems far off. That said, an optimistic view is things are often the darkest before the dawn with some of these things. Maybe cooler heads will prevail. Maybe the Iranian regime sort of recognizes their weak position and may try to tone things back a little bit. I'm not sure. But again, I'm not really optimistic that that's going to, the situation is going to resolve itself anytime soon.
Well, let's stay overseas. Let's talk about China. So, look, there are certain things that take place pretty consistently near market lows historically. And, we don't tend to focus on the fundamental causes because they tend to be too varied, and the sort of permutations are infinite on what can create bearish and bullish environments. And in this case, what we're seeing and what we have seen, we had a capitulation signal in China back at the end of January of this year. And that did turn into an uptrend, albeit pretty methodical and kind of lackluster, if you will. But that's now turned into momentum. And, we are seeing unprecedented numbers. I mean, I've been doing this for 35 years, and I've never seen live. And I actually don't even know if historically I've seen some of these internal figures that are as strong as what we're seeing out of China, what we're seeing out of Hong Kong. We're talking about 90% of issues making 20-day highs. We're talking about 99% of issues above their own 20-day moving average. And the reason that these things are important is it's a reflection that the asset class is being recognized. It's not tech in favor of discretionary or utilities or money sloshing around. This is money going to work wholesale, and that usually has a very long tail to it. So I actually think that there's a very high probability that that market will double in the next 18 months, and it might even be sooner than that. So I think there are real things taking place in China from the market's perspective. I do understand that a lot of it is policy related in terms of monetary policy and trying to actually cauterize some of the bleeding that we're seeing out of the housing market there. But again, it's very easy to look at the narrative. It's very easy to look at the headlines and then come up with a bearish conclusion. But part of those headlines, part of that narrative is the reason that policymakers are forced to act and use the bazooka to do so. And if you go through and look, there are plenty of names with massive amounts of cash on their balance sheet. Most of the big names that you see have PEG ratios. In other words, they're growing faster than their current valuations. Their PEG ratios are well below 1. There's a lot of good things here. CERM, which is our proprietary, basically alpha adjustment model. The risk-adjusted returns that we've seen in China are horrendous, unlike anything that we've seen over the last 40 years. Those are the types of conditions where the green shoots tend to produce themselves and germinate. And so, this momentum is a reflection of that. This is where you can make the big money. And we are very, very bullish here on China and what's happening there from the market's perspective. I don't get into the narrative. I don't get into the reasons why. You can paint yourself into any corner you want with that stuff. But if you just look at the market's reaction, it certainly is bullish. And that's likely to have some follow through globally in terms of what that means for various sectors, various industry groups, and then obviously individual equities. Neil, what do you have on the calendar next week for data points?
Well, the first thing I'm going to do is probably start drinking at noon after dealing with this jobs number that went completely the other way.
Isn't that every Friday?
No. When the numbers go my way, I'm usually doing a tap dance in my office. But anyway, my hope is that I'll have something to celebrate next week because we get the inflation data for September. And, my expectation is that we see fairly benign inflation prints for September. I mean, we do know that the headline should be soft because retail gasoline prices fell over the month. I mean, what we're going to see in energy prices didn't happen until October, so that's not going to be reflected in this number. And so I think the headline number will be soft. And I wouldn't be surprised to see a soft core CPI reading as well, because one of the things that we've seen is even though core inflation has been weak over the last several months, that's happened without much effort from housing rental inflation. So if you kind of see some slowing in housing rents over the month, that should mean that core is weak too. We'll also get the producer price index as well. I think that number is taking on more importance of late because, frankly, Powell used that as a rationalization for a 50 basis point move in September. Remember at the time, core CPI was firmer But the producer price index is an important input into estimating core PCE inflation, which is the Fed's preferred measure of inflation. So we had some inputs from PPI that mattered for PCE. But when it's all said and done, I wouldn't be surprised to see another 0.1 on core PCE in September. So we'll get the inflation data next week, and that'll be the main event. We'll also be getting data on consumer sentiment for the preliminary October number from the University of Michigan. Now, obviously, stock markets have been okay, so that's good. But people may get spooked a little bit by what they're going to see at the pump, right? And so maybe that weighs on consumer sentiment. So we'll see. But those are the main data points that are coming out.
Steve, what do we have for whether election or global politics?
Well, unfortunately, I think we're going to continue to monitor the situation in the Middle East. And I think from a political perspective, there's probably going to be interest in the consumer sentiment number. That's something that a lot of political campaigns look to try to point to get a sense of where voter sentiment is, given that consumers tend to be voters.
I know there are plenty of swing states, but what's the state most important to you in terms of watching the polls? Is it still Pennsylvania?
I would say so, even more so now because we talked about how North Carolina and Georgia in particular may be altered because of the hurricane. Just looking at the Real Clear Politics average here, right now Trump and Harris are tied 48.2% each in Pennsylvania, if you can believe it. Trump has narrow leads North Carolina, Georgia, Arizona. Harris has narrow leads Michigan, Wisconsin, and Nevada. So after polls are accurate and were Trump to win Pennsylvania, then he would win the presidency.
Yeah. Well, we're going to continue to watch the cyclical versus defensives. We want to see more improvement out of the discretionary side of the ledger. Certainly, there are areas, Home Depot, Lowe's breaking out, and that is independent of, or I should not say causal of the hurricane. There's more to it than just that. But that's good news, and we're going to continue to lean into this China call and gain as much exposure as we possibly can on that, because it is that important of a call in our book. In terms of overall levels, 50-day moving average on the S&P remains an important level for markets, and then 5167 is the default 65-day low that we'd look at on the downside. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and YouTube. And if you want deeper insights, you can join us at renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pallett.
We'll see you.